Our first panel of the day will discuss the digital revolution. Are banks watching from the sidelines? The panelists will dive into the topic of the day everywhere: digitalization and artificial intelligence. Are banks and supervisors keeping pace with developments and risks? Let's welcome our moderator Yasmin Osman and the panel members to the stage. Yasmin is a senior journalist at the Handelsblatt, covering banking and insurance. She has covered the SSM since its beginnings in 2014 and authored a book on what everyone should know about banking supervision. Yasmin will introduce the panel members and invite you to join the Q&A.
So, welcome to our panel discussion on digitalization. Well, I don't have to tell anyone here in the room how much digital transformation is shaping the financial world, but how far have banks really come so far? Are they driving innovation, or are legacy systems, complex regulations, low budgets still holding them back? And ultimately, will digitalization strengthen the sector? Or will it expose new vulnerabilities? And I'm delighted to be joined in this discussion with very distinguished experts. I start with you, Francesca. You are CEO of Revolut UK, and your career spans positions in major traditional banks like Barclays and Deutsche Bank, but you've been also founder to Molo, the first digital mortgage lender in the UK. And now you are part of the most valuable tech company, as I learned, in Europe, Revolut. So welcome. Ray Pinto, you are Senior Director at DigitalEurope, and that's Europe's leading association for the digital industry. You have among your members big techs, traditional industries, also banks. And Arthur, you're Deputy Chief Executive of the Hong Kong Monetary Authority, and you play also an important role in global banking supervision, as you are a long-standing member of the Basel Committee, and you are co-chairing the committee's policy and standard group, as I learned.
Yes.
So before we start the discussion, I would be happy if you engage also in the panel in two ways. So I prepared two little polls and would ask you to answer the questions to enrich a little bit our panel. So the first poll question would be, what do you think is the main barrier to faster digital transformation in the financial sector? And before I tell you the second question, I will mention that if you do have questions, feel free to send these questions digitally. So if they fit well in the discussion, I will ask them also during our panel session before we have the Q&A answer. So then the second question of the poll would be, how would you assess the impact of current regulation, like DORA, MiCA, or AI Act? So, would be great if you participate. And then let's start with our panel discussion first. So the title was, Are Banks at the Sidelines? Yesterday we learned some interesting numbers about what the digitalization means in the banking sector. I remember that I think Autonomous presented a poll that 40% of the banks say that more than 50% of their data are still in the cloud. And I learned that Sharon mentioned that 58% of the banks use AI already today. But, as Andrea Orcel put it, it's not important how much you spend, it's even more important if you spend it right. So, Ray, you have an insight in many companies. So what is your impression of the digitalization status of European banks? Are they leaders among industries or laggards? How happy you are about their state?
Look, thank you, Yasmin, very much. And I want to thank the ECB for inviting us to speak and my fellow panelists. I have been in this business for a long time. And I remember in 2010, no banks were going to the cloud. And it was impossible then to do so. The regulators stepped in. And you have things like DORA that has now facilitated that, and that speed, which is creating innovation. You mentioned members that are part of DigitalEurope. Yes, there's banks, there's stock exchanges, there's payment services, but there's 45,000 innovating companies here in Europe, and they're creating massive innovation. And so I would like to think, and I think everyone knows this, you all have your payments on your phone, you tap your payments, you connect to services, you manage your wealth. If you look at some of our big members, CaixaBank is investing 5 billion, and they're doing so to have very advanced customer services that are going to be AI-driven and cloud-based driven, right? You have Santander Bank that works with a company called Ripple, that allows wealth management here in Germany. I don't know how many people are using it, but quite effective. And ING is also using blockchain technologies. So I think what we're seeing now is banks are at that pivotal point to decide, are we going to let this pass us by, or are we going to move quickly? And I think, considering who's sitting to my left, banks are moving very quickly, and that's a good thing. Now, what we'll get into later on, and not the regulations that the minister, an excellent speech, was outlining, we'll be looking at some of the very focused digital regulations, and what is the interplay with that now in this kind of new territory of creating digital services.
Well, yesterday I learned that regulators are paid for being more pessimistic. So let's check this. Are you happy about the status of banks as well?
Okay, first of all, let me also thank ECB for asking me to join the panel. I know that I'm the only bad guy on this panel, so I'm supposed to say the bad things. But seriously, before I answer the question, let me put this perspective to the audience. We always feel the banks are moving slow, but that's mainly because banks are not just any normal commercial operations. When banks fail, it creates repercussions. So President Donohoe this morning talks about the need for stability. That's exactly why regulation exists, to ensure stability. So the banks would not just fail that easily. So when we look at how quickly banks are adopting these kind of technologies, we have to always bear that in mind, that you might actually feel that they are slow, but don't do the following. Today, when we want convenience, we go to banks and say, how come you're so slow? But when things turn bad against you, then you switch to the other side and start criticizing, hey, how come you did not protect my interest? So it's very important to strike that balance. That's a very important point to put up front. Now, you asked me whether banks are too slow. I wouldn't say that. You mentioned the figure of 58% of the banks in Europe are already adopting AI in some way, some shapes and forms. The corresponding numbers in Hong Kong, by the way, is 75%. So by comparison, probably we're moving slightly faster. But nonetheless, this is a fast-moving space. So I don't think with those kind of numbers you can really say the banks are moving too slowly, bearing in mind the first consideration that I've mentioned.
Well, I think one of the larks among banks in digitalization is surely Revolut. So maybe you give us an impression what digitalization means for you, how much you're spending, for example, on AI, and what are the main areas where you digitalize or using AI to improve your business.
Yeah, no, thank you, and it's a pleasure to be here. So very happy to share perspective, and we are all kind of trying to contribute, right, to the wealth of the financial system. So I think what I would say, well, first of all, I would say that whilst Revolut is a bank in most countries, yet we are a special type of bank because we were born through the digital age. So in a way, we are digitally native. And I just say that because I spend my life in other type of banks, and so I can compare and contrast a lot, and probably that's where I think that a lot of the insights that I'm having now come from, right? So given our nature, so we are being really digitally native, of having built everything from scratch, we try to adopt innovation quickly. And I would say the key differentiators I see when I compared to what I've seen before is that there are probably 2 or 3 dimensions that make a difference in the ability to be innovative and to be disruptive, right? And one is clearly, it is a culture, it's the agility of ability to what also Sal was saying yesterday. Today it's very difficult sometimes to plan for like 5 years. You need to have the ability to go in one have a clear direction, but then iterate and evolve. And that sometimes difficult to do in a bank. The second one is being very data-driven. So incredibly data-driven. You need to have the data infrastructure to be able to do that. And so, and that's something that from what I experienced before, sometimes even really difficult to have the clean data layer or data stack, right? So, and that's why I think the cloud is helping with that. And then in general, having a very solid infrastructure that is new and modern, right? And this is happening across the banks.
How much do you spend on your infrastructure? So what is your technology investments in percentage of your costs?
Well, I think a majority of our cost is technology investment, but because for us, everything is tech-driven. So it's very embedded. So it's very difficult to split and give a number. But I would say we are investing a lot now also in AI. And to your question before, is kind of invasive, right? So what we do in AI is, I would bucket into 3 areas mostly. One is customer facing, so clearly the typical customer interaction. I think right now our customer service, 80% of the inquiries are already answered by our AI bot, which is continuously evolving, which is quite a big portion. And second, there is a lot about defense, and that's where I think makes a difference. And I do think that innovation goes hand in hand with trust and security. Defense, I mean like fraud screening, transaction monitoring, sanction screening, I would say, and fraud prevention. And today I would say it's almost impossible to be at par with criminals unless you are investing in very advanced AI and machine learning technology, right? And so that's why it's almost a call for action. You need to be innovative. So that's probably the biggest area of investment for us in AI. And there are a lot of other use cases which we are mostly experimenting around. For example, even marketing, communication, legal, and all of that. So we're doing, but the way we adopt AI is across the board. So we do pilot, iterate, and evolve, and because from top down, is seen as a priority. So in everything we do is involved. And I really share the view that was mentioned yesterday by Ursel, which is, the problem is that AI is not a tool. It's different ways of working, so you need to have the mindset, the ability, and the flexibility from a team point of view to embrace it in a way.
Okay, thank you very much. So, well, I think we do have the results of the first poll, and it would be great if you could see the result.
So you get a drum roll?
Okay.
See there,
okay.
there, yeah.
So I see the leading impediment is corporate culture and mindset, followed by regulatory complexity and shortage of digital experts only on place 3. And obviously there is enough budget to invest. So what do you think if you see this results? Is this matching your expectation or your experience? But at Revolut, probably not the culture.
Probably at Revolut, no, but it's really an interesting question. And please, it's really interesting to see what this audience thinks first. So from my experience, I say broadly, yes, and some areas are surprise. Right? For me, if I had to rank it, I would say definitely culture and incentives is number 1, and that's for me is a fact. So if you in a company, everything happens when you have the right direction and list prioritization and KPI set on it. And I think in a lot of big banks, not a Revolut, right? So, but that's where I can compare and contrast. In a lot of banks, sometimes it's not really pushed from the top, and honestly, driving innovation drives cannibalization of the existing business sometimes. And so you need to create incentives environment to A, make mistakes, but second, to cannibalize existing business. for something that, for building the future, right? So that I would definitely resonate with me. I would say that one thing that I see missing the list is legacy infrastructure, because I think that's a deterrent sometimes. I don't know if you share this, but I do think, for example, we forget that even just to build any automation, you really need to have clean database and single customer view and all of these things that sometimes are still not there. So I think the legacy infrastructure, the technology, data infrastructure is something I would add to the list.
Yeah. Yasmin, if I may come in, I'm really impressed by that answer. Because if you put the same questions in Asia, I think the fourth one would come first, cost. And then probably mindset would come third or fourth. But in our experience, actually, the main thing that's really pulling any initiative back is whether to have the right mindset to do it. If I may put the following perspective to the audience, traditional banking model is pretty much a transaction-based model. So whatever you put in terms of buying a new system or creating a new system that's AI-based, the natural questions that the management team and the board would ask is, am I creating enough transactions subsequently to justify the expenses? So that becomes an expense consideration, not an investment consideration. But in this world, when AI, DLT technology is actually not easy to build, and it's quite fundamentally changing the way banks actually operate, if you really consider those as expenses, it doesn't help you. So mindset is important, that you really think about those kind of things as an investment item rather than an expense item, and quite fundamentally review your business model. Going forward, is it transaction-based or is it data-based? I don't think that question is being asked enough times in a lot of banks, probably because of legacy issue that Francesca was talking about.
Yeah, let me add to this, because I agree with you on legacy. And definitely on cost, because if you're looking at distributed ledger technology, if no one's using it, why would you be investing in that? There has to be incentives that there is wide adoption of these technologies. But let me pick up on regulatory complexity. We have been looking at a real piece of regulation, which was the GDPR, right? It's 7 years now since it was adopted, I think 7 or 6 years. And even to this day, there's still many questions about its implementation. They're still trying to create guidelines, right? But now we're in a world of ex-ante regulation. So this is regulation that is trying to predict what are the ills, what could happen, what are the bad things. There's studies, there's CNN news reports, there's isolated incidents. But I think we now have a very robust piece of legislation called the AI Act, which is on the table, and it is moving extremely fast for its implementation. No one can ever say to the regulators, you're moving far too slowly, right? They're moving very quickly. And I think now what we're seeing is a huge potential of fragmentation for this act. There's a lot of the member states that are implementing it in their own kind of different way and flavor. There is standards that haven't even been developed, or guidelines that need to be developed to help people try to implement regulation in areas that is not even crystal clear in their own minds, which is creating huge costs. So that's fine if you're a big bank, it's probably not fine. But if you're a small company, the initial impact assessment that for the AI Act that was done before all of this started by the European Commission said that the cost of implementing the AI Act would be 300,000 euros. Now, how do you do that if you're a small business? Tell me. So we are at an inflection point, I think, where there could be a dramatic slowdown of such innovation here in Europe and development of these technologies and adoption that we haven't seen because that wasn't there. So I think regulatory complexity is a huge risk.
Well, that matches with a talk I had with some COO of a bank. And he said, for AI, I do have 50 people, difficult to find, high to pay. And a third of them is dealing with the implementation of the AI Act in categorizing the levels of AI security, and that's pretty far too much. So Arthur, you're looking a little bit from outside also on the situation in Europe. So what is your impression? Is this a sound share if a third of the people is on AI is doing business with regulation?
Well, I think the point about regulatory complexity is always a balance between how prescriptive you want the regulation to be and how much efforts you put in after the regulation is put in place to interact with the industry. So, and it's not binary. That policy choice is not binary. It's a combination of regulatory certainty as well as engagement subsequently. So by comparison, I would just use Hong Kong as an example. Our first AI regulation came out in 2019. It's principle-based. It doesn't really contain a lot of details, and therefore the industry would have to find a way of interacting with us on a very interactive and iterative basis to find out what exactly do we mean in practice. Yeah. So, and then when generative AI came on in about 2 years ago, we actually took a fresh look at that 2019 principles, and they were still valid. And so the beauty of having a principle-based regulation is that it lives through different phases of development. But then because of the lack of clarity in the regulation, you do need to put in place mechanism for interacting with the industry in a highly iterative process. So we did two things. First, in 2016, we had a sandbox put in. A sandbox is to allow banks to really, and tech firms, to really try out ideas. And we promised them, if you fail, you won't face like 20 on-site examinations next year. We promised that. And actually, throughout the years, we had like almost 400 test cases. About 20-30% of those did not graduate. So they fail in the sandbox. And we never actually create any negative supervisory response function brought to bear on the banks. So that's the first thing. That basically is to reduce the cost of failure of trying out what exactly do we mean by those principle-based regulations. The second thing we did was in 2019, we put in a chat room. So tech firms and banks, and even tech firms alone can come to us and ask to talk to us, have a 2-hour sessions with us, talking through some of the ideas, what would be our immediate supervisory responses, and what are the things that they need to focus more attention to. Up to now, from 2019 up to now, 6 years, we have almost 1,000 chat room sessions with different people. And they all came back and said that, oh, that's great to have that kind of a very iterative process. We even brought in other regulators in Hong Kong in the chat room sort of sessions. So you really need to do that, but that's very resource intensive, honestly. Imagine 1,000 sessions with tech firms. 60-something% of those requests were actually from tech firms alone, not involving financial firms. But we still entertain that because we set out those principles, and it's only incumbent upon us to explain to the market what exactly do we mean, what would satisfy us, rather than putting it in detailed regulations.
So may you tell me, I think you cover or supervise around 100 firms. Yeah. So how many people are dealing with these chat rooms? And because you mentioned that it's very intensive.
Well, on our part, I do have a team dealing with SupTech, just a few people, but the resources are actually not in the central team. The resources are in the risk experts. That when they were asked a particular usage of AI, they would need to round up the right people in the risk teams to come forth and spend the 2 hours with the tech firms to tell them this is how we look at this technology application. So it's very hard to put a number to it, but I would say it is resource intensive for the regulators. But nonetheless, it's more, I would say, agile in our response to where the market's heading.
Yeah. And if I may add to that from banking point of view, because we have a similar approach has been adopted in the UK. Probably everybody knows. So there is an AI even more extreme. There is an AI regulation. The regulators have decided to effectively not regulate this rigidly right now, but engage with industry. So it's the same approach. And so there's an FCA sandbox, there is a task force set up by the Bank of England, and we are really engaged on that. And ultimately, the regulatory rule has been that they put the responsibility on the senior managers. There's a very strict senior manager regime, and so effectively it's about delegating and the opportunity and the challenge and the responsibility, and that's working very well for us. It does require an extra effort from the industry to engage, right? But it gives us a little bit of a safety net to also experiment through the sandbox. I see that from a regulatory standpoint, there's a lot of learning, so mutual learning, effectively. And so that's, from an industry point of view, I can reply, it's very welcome, especially because the use cases are still very fluid. And it's probably the better way to shape a little bit, it's a good way to shape the future, right?
But
it's happening.
Yasmin, if I may also add, there is also a very strong need for us to internally ensure that whatever response we give out to the industry, it stands the test of time. So we won't have different teams talking about different things over time. And that's another reason why it's so resource intensive, because we have to build in the internal system to ensure that we have consistency in our chat room sessions as well. But technology is helping. We're developing AI engines to look at what we are talking to the
Arthur,
industry.
Let me ask you. Sorry, I'm going to take over. Let me ask.
Feel free.
let me ask you about the reviewing of these regulations, because I think what's needed, and thank you for that input. Because at the dinner yesterday, there was a lady who was speaking. I think she was on behalf of Canada, the UK. Excellent speech, and she was saying that her supervisory regulatory groups are also getting people in a room, understanding the technology, seeing what is needed, and then applying where needed. Are you constantly reviewing these, regulations, so it's a flexible regulation, allows short-term review?
Well, as I've said, our requirements in terms of DLT and AI and cloud are actually very principle-based. So through those chat room sessions and what we call fintech supervisory sandboxes, we actually get inputs. So we can keep reviewing whether there's any new use cases popping up that requires us to fundamentally revisit the principles that we have set out. So far, no. Actually, I think the principles are still very much intact. But that's a good source of inputs for supervisory
Indeed.
simplification, if you use the word.
So my impression is, Ray, you would like the idea to see kind of regulation like this in Europe as well?
Well, I think the interesting thing, what we're learning here, is that you can't be rigid. You can't just put in a block of rules and hope it works without constantly working very closely with the industry. That doesn't happen, unfortunately, as much as it should in the development of these new digital regulatory policies, right? The regulators in the banking sector, right? And I love this because when there was a whole financial systemic meltdown in 2008, the ECB, the EU, the Commission, they came in there, they saved the economy. You have the single resolution board that's effective, that works, right? So this is an instrument that understands intuitively how markets and economy and banks work. We don't have that for AI. No one knows. It develops at such a fast speed. You need the time for A, to develop it, B, to implement it, C, to create this level 2, level 3 implementation, the standards and rules and guidelines. So yes, that is very much needed. Slow down, simplify, understand where the market's going, because if it's too heavy hitting, if we get, too concerned about what could happen, what may never happen, if you look at all the predictions of AI, it hasn't delivered, or it's delivered in a completely different way. So we have to understand this very closely and work closely, with the regulatory bodies and supervising authorities. Otherwise, what you may have is, as I said, fragmentation, but even worse, you're telling the supervising authorities, to take a huge amount of data and information and implement. They don't have the resources, skills, or ability. They will be overworked and they will struggle. So
unless they use AI. maybe they invest in that as well.
Yeah.
So, but let's see if this is matching the impression, our discussion of the audience. So, do we have the results of the second poll? I would be curious about it. Okay, obviously the views shared that it is too detailed and prescriptive, but very close. It provides a reliable and helpful framework. So you are regulated more principle-based. So would you like sometimes a little bit more prescription in regulation that you have a safe framework?
Well, I think it probably depends on the situations. I think in general, just for avoidance of doubt, principles doesn't mean there are no rules. And so that's really important, right? It's always about a bit of balance. So in fact, the rules are clear. I would say the rules are very clear. And, but the principles gives you the ability to evolve in time, especially when there's high innovation, to adapt. But you do need to have boundaries are very clear, I would say. I think I would differentiate though. There are things that are very clear, stable right now. If you think capital rules, right? At the end, you need clearly rules, specifics, and so on, because it's very clear what the framework you're dealing with, and what are the requirements, what is the trust, and the minimum safety net you need to put. So on that side, yes, you do need very detailed and prescriptive, really, rules of the game. In some areas, I think it's like AI or things that are still developing. It's probably very difficult, so you can put some broader boundary, cast a net, but then effectively you need to grow together, the industry and the supervisor, I would say. But yes, for us it's working very well, the type of regulation we have, and the engagement of regulators works very well. I would say the important thing, maybe as an overall meta message, is that we should not forget that regulation, so to preserve, you know, the safety of the financial system. So there is regulation, which is mostly policy, but there is supervision. And supervision really is really important. And that's when you get the engagement, that's when you get the flexibility, then when you get together to understand what's happening. So I think more than rules vis-a-vis principle, I was encouraged everybody to think that there are the toolkit is broad and includes the rules, the policies, but includes also supervision. And supervision is where sometimes you can get into more fragmentation or more difficulty, right? So that is a very important toolkit as the world evolves, because that's where the regulators can work side by side with the firms. I don't know what's your experience, right? And a lot can be achieved in that space as well. That would be my
But honestly, if you look at that response, in the world of supervision, we always have this saying that if half of the banks criticize you and half of the banks applause you, you're about right. So that shows that the European regulation is about right, I think.
Yeah, but well, you're for sure not in Hong Kong the ones who are too detailed and prescriptive, as you showed what you are doing. So my question would be, being the other half of the banks then, how do you ensure that the system still is safe if your rules are so agile?
Well, first of all, when we test it out, we do insist on banks having a representative enough sample of customers joining it. So not really just trying it out with 5 or 10 customers, but you have to have a representative enough, a statistically significant sample. When you scale it up, then you would need other sort of risk considerations to be put in. I actually went back to our database to see whether there has been any banks which graduated from the sandbox or they came to a chat room and subsequently getting into big troubles. So far, no. We haven't actually come across those kind of cases. Mm-hmm. So I think it's doable in practice, although it's seemingly very agile and not really very certain upfront. Through ongoing dialogue with them, you can actually scale it up without getting yourself into big trouble.
Yeah. Yasmin, let me add also, I don't want to give a false impression that industry doesn't like regulation. Just not true. And if you look at that response, I think people get confused because they're not being asked if these regulations are good or bad, right? So I think everyone in this room, if you're industry or if you're a regulator, will say we need those rules, right? We would not have a banking system if we didn't have regulation. I would not be giving a stranger all my money if there wasn't regulation? The question, though, is, and I think if we ask that question, is what are the parts of these regulations, right, that need to be put in? And maybe it all has to be put in, but it's a lot. And I think it's that message that we heard in the opening keynote. It's about streamlining. So I'll just pick one regulation, the Payment Services Directive 2, right, the PSD2. There's many different parts of this that is required if you want payment services, to happen in Europe. But with this regulation, there are 6 mandates for technical standards. There are 5 mandates to develop guidelines. There's 240 legal requirements now to create Q&As. This is going to take time, right? And maybe there's areas of this that have to be simplified and implemented. I think earlier I said it took 7 years for GDPR. My brain was ticking along. I think it's been more like 10 years. So, we do need the time to implement these things, and there's a cost that's going to be required, and you need clarity. Because many of these different regulations, like the AI Act, for example, there's a lot of the definitions and scope and requirements of what is high risk that's just not clear. So I think this is what is needed.
Okay.
Yasmin, if I may add to that, we put a similar question to banks regularly to ask them, what do you think are the major challenges for innovation in your bank?
It's also 50-50 the answers?
No. In the latest, we didn't ask them about regulation because if our rule is that if you won't like the answers, then don't ask the question. So we put it in a slightly different way. We asked them, what do you think are the major challenge to innovation? And we do have a regulatory framework in there. The top challenge that they face is actually what they mentioned, cost of implementation. Regulatory framework only came in like the 6th item down there, with only about half of the banks saying it. But 75% of the banks were quoting cost as the major consideration. Other things like legacy system, they did mention it as the 3rd highest quoted challenge. Data privacy and cybersecurity, 61%. That's the 4th one.
I feel compelled to add to this. Thank you for sharing, because this actually resonates a lot. And I would like to share also the other perspective, which is actually, I was very surprised to see regulation as one of the items even there, because in reality, sometimes we experience the opposite. I'll give an example. You mentioned PSD2. PSD2, which translated in the UK into open banking, and now it's becoming open finance, has been one of the biggest triggers for innovation, disruption, and competition in the market. So open banking is today reality is kind of unlocked development of a new business model. A lot of new companies that are today unicorns have grown up because of that, just to enable the open banking exchange of data. It has completely opened up to competition in terms of new smaller banks and a smaller player being able to operate on a level playing field with bigger banks. Customers having a much better convenience, and ultimately, we're forgetting to talk about the customers here, but everything should be a means on end, right? And getting a better experience. And right now, this is leading to a private and public partnership between the industry regulators and really the government to move to the next level. They will probably develop new revenue models and new revenues new business model for the industry, but affecting new services for customers. So I think that's been very, very good sometimes. And similar in some situations, if we don't have regulatory clarity, we cannot innovate. And I really think that's really important. So we've had some dialogues in the last few months, for example, about the new innovation that's happening around about stable coins. And it's impossible to move ahead unless you have clarity on the regulatory guidelines and the regulatory where it's going. So I think it's important to keep both sides of the coin in mind, just to reframe that.
Well, you mentioned the customer, and I think we haven't discussed this perspective so far on the panel. So we learned, I think it was your numbers, that less than 20% of the EU citizens have a high level of financial literacy. Now, digitalization is going on so fast, so that I question myself, do we lose 80% of potential customers? Because, well, nowadays we have high-level criminals who have a high literacy rate, I would say, on financial terms. So how do you deal with that? So do we lose a lot of customers and they lose all their money because...
Well, I would maybe split the problem. I didn't know about these stats, but happy to elaborate on that. So
it's your commission, by the way.
Okay, fine. I get it. So I would maybe talk about two things. First, just talking from Revolut, right? So really to get some facts about what is really the customer base we're talking about, right? And then second, about what you're saying, which is effective fraud, and could it be, what are the most negative outcome of that? So on point number one, I would say that sometimes when you think about innovative players or digital banks, we might think in general, people think it's, these are targeting like young people, right? 18 to 20-year-old. That's not true anymore. So in reality, if we think about customer base, the average age of our demographic is 38, with big tails on both ends, but not really a lot into the 18 and 20. In fact, that's the areas where we have a problem growing, right? So I think it's, so first of all, digital adoption is more widespread across different ages and different sides of the demographic than we probably think. But very happy to discuss that, what you mentioned. So there's already, in terms of coverage, in terms of addressable market, it's very wide, and it covers, even older or size of parts of the population do adopt and use digital and mobile. The second thing is, however, we are aware, for example, from a Revolut side, that not everybody has the same digital skills and do an extra effort in terms of education, but also service level. We do have this categorization in Revolut about customers that we think they're kind of one way or the other vulnerable customers, and then there is a specific ways to reach out to them, ability to offer more direct in-person calls and things like that, right? So there is differentiation in terms of we're able to differentiate between people that need different levels of a different level of digital adoption. I think separately from a, fraud point of view, I think it's true that fraud is one of the biggest problems that we have right now as a societal challenge. It's not just a financial services challenge. In UK, it is the number one crime in this. But I would say it's a more broader, and I think that the focus should be on broadening out what this impact is across all sectors, not just, it requires, across industry segments between technology companies, service, financial services, and also, social media in a way. So I think on that, if I had to say, think about the customer, there's a lot that can be done, and we could talk about this, about data sharing, share liability,
also, if we
and things
then
like that.
have quant computing?
Yeah, that becomes very difficult. So I think fraud, it's a bigger chapter, and I think it's not only related to people that don't have digital skills. I would say it's much broader than that, and the plan of action should be much broader. We're doing a lot of work on that internally, as I mentioned before, in terms of being ahead of fraudsters, in terms of the technology capabilities and how we much invest on that. But I think in general, what we found, and there are a lot of international experience there, is there are probably three things that matter. One is data sharing. Cross-industry data sharing that is done only in few countries. We know that in Australia there is a very, very big and very good agreement across all industry to share data, because at the end, if you have a scam that is repeated 3 times, it's always the same, right? But we don't share data. Now it's very shallow. So there are a lot of private sector initiatives, for example, in the UK, to try to do that. They're moving very slowly, but giving a bigger push from a regulatory point of view, government point of view, data share will be important. Second, I would say, is share liability. Right now, in a lot of countries and regions in the world, financial services are held responsible. We do reimburse all our customers when there is fraud. There are regimes for that, but the truth is too late. We are kind of the last line of defense, but in reality, reimbursing doesn't solve the problem. You need to prevent fraud at source, and I don't think this is really tackled yet. And then thirdly, I would say, on the customer side, there is the need of a lot of education, because right now what I see is that it's very difficult. So, for example, I know, because being a bank, I know what the other type of frauds are happening. You probably know as well, and I pay attention. And in spite of that, sometimes I'm targeted still, right? But if you don't know what to look for. And so I think we should, something is happening, for example, in the UK with different entities and trade associations about giving much more education since early age to everybody, what to look for, what are the risks, and this needs to ramp up, because unless everybody needs to upgrade their toolkit, right? And otherwise we will be exposed.
And
so that would be
I
my
think also
2 cents.
Sorry, just very quickly, online safety, how you purchase and how you're not going to be defrauded, is not only the bank's responsibility. It's everybody's responsibility in this room, including the media, right? So everyone has this responsibility. Financial literacy is, who knows what a DLT is? Put up your hand. Who thinks it's a sandwich? Okay, very good. This room knows. But 80% of Europeans do not know. So this is the efforts that we need to make, right, as a government, as industry, both financial awareness as well as online safety, right? But banks actually play a huge role in protecting you. So I got frauded actually recently. It was very stupid. It's amazing that I've been in digital my whole life, but it happened. And the banks came into my aid. I had an insurance and I got reimbursed, right? So also now, and I love playing with this, I'm such a nerd, but the banks now, you can put in your IBAN number and check if it corresponds with the name. How cool is that, right? So, banks are actually there.
We're doing a lot.
Yeah, they're doing a lot. And everyone is responsible, including the consumer themselves, right?
Is the bad guy
But Ray, just to make you feel better, we actually look at the profile of people who get defrauded by online scams or online fraud. There's no linkages to financial literacy whatsoever.
No.
There are professionals who are actually in the financial world who get defrauded by online scams. So to debunk that sort of myth, it has nothing to do with financial literacy. The other thing is financial literacy, yes, we need to enhance that. Going forward is very important, but I thought COVID has done a part of that already. But most important of all, when banks develop technology solutions or application scenarios, they should really bear in mind that technology is not for exclusion purposes. Technology should be for inclusion purposes. If you deploy technology properly, you can actually enhance the services to, for example, the less digital savvy group like elderlies. There is an AI application being tested out in Hong Kong. When an AI engine communicate with elderly online, they actually look at the facial expression. Do they look puzzled? If they look puzzled, the AI engine would issue the command, slow down, and explain in clearer, simpler terms to the person and ask them, are you puzzled? So there are things that you can actually deploy technology by helping people out that are less digital savvy to actually use the service better.
Well, I promised that the audience will have the possibility to ask questions, and if there are any questions, please raise your hand. So,
Marko Pahor, Banka Slovenia. Since speaking of digital, stablecoins were mentioned briefly, but for the whole panel, what is your take on central bank digital currencies, and for Ray in particular, the digital euro, obviously?
Okay, all right, let me answer this question. I was told by my staff, be careful how you answer, it's the ECB, but look, I think what would be good is that we have, a lot more explanation about, stable coins, about the digital euro, and then to work, do we need this very fast? Can we do it, together with industry? Can we help you? And have a conversation about what it means to banks, what it means to tech providers, and then develop this together. And I think that is necessary. So I wouldn't come out and say, no, we don't want it. I think we just got to understand it better And I would love it if, the ECB would come to our big conference and explain that to our members. And then let's develop this slowly and understand, what is required and what speed should we develop this. Again, regulators do not need to move at the speed of light like you have been doing. You can take your time to develop these things, particularly in these new areas. And I know we have to respond to different regions, but that'd be my answer.
Well, CBDC, if I may add, there are 3 different forms of tokenized payment solutions. One is CBDC, one is stablecoin, one is deposit tokens or tokenized bank deposits. We actually came out recently with a policy statement saying that we think that CBDC at the retail level, there's not much value add in it in Hong Kong. So we decided to go slow on that one. But we do think that at the wholesale level, in particular cross-border payment, it makes sense to continue to deepen our readiness for that. And so there are different ways of tokenized payments, but probably they are fit for different purposes. We have to find an actual use case that makes a difference.
You have any?
Okay. No, the only thing I would mention is that it depends. I don't think there is right or wrong. I think it's really important that it's very clear, the clarity of thought on what is the why, right? So the value and the use case, really, because I find that sometimes even in CBDC, there's a lot of discussion, should do it or not, without knowing why. And so I think it's perfectly legitimate that there might be different areas of the world that come up to the different conclusion because the why. But I think that's what it's the main thing is, does it really make sense or not for the specific area, what you want to achieve, right? And you've probably done your assessment in Europe, the different discussions, UK, very different discussions. So I think that's the important thing, not to lose sight that this is a means to an end, and so you need to know what the end is, in a way.
So here has been a question in the second row.
I wanted to, picking on the, Lea Zicchino Prometea, wanted to picking up on the issue of financial and banking market fragmentation in Europe. And I was wondering whether for a bank like Revolut, UK, the fragmentation in Europe is a challenge or it gives you an advantage.
No pressure.
You're on your own there.
No, it was really interesting to listen to the speech before where this topic was touched on. And I will maybe split the answer into 2 sides, and more macro and then Revolut, right? So more macro, I think there is no doubt. I think fragmentation is holding Europe back, in my view. And this is not about us, it's about our ability to compete in a world where there are big blocks, where Europe as a whole could be as big as the US, but we're not, because we are still operating as a different country. So yeah, I think definitely is a very key area of focus. I'm very pleased to hear that this is being resurfaced as a priority. Hopefully there will be some solutions soon. For us, from a more regulatory fragmentation point of view, I would say that I would reiterate what I mentioned before about the difference between also supervision and then policy, right? So there is an harmonious regulation in general in Europe. The reality is it's very fragmented the way it cascades down in each country, and it's for us it's creating probably more a challenge than not, because we are, and I think in general probably it's true for everybody that wants to operate on a global or across border, right, international. We are a global company. We operate based on a global platform, and sometimes the same spirit of regulation has to be fulfilled in very different ways, and that of course does create a lot of challenges. So I think it's an impediment to growth we were discussing before, right, and to economic development, to growth, and so on, because at the end, we put a lot of effort, and we have likely a lot of resources we can dedicate also to compliance, but the level of compliance specificity that's required today is massive, and so I don't think everybody can probably afford that. So I think it has 2 problems. It slows down the integration of Europe, which I think is key from a general macro goal, and second, it probably impairs a level playing field between big players and small players, because ultimately not everybody can follow through, and so you might have So only few companies will be able to become more global, more international, which also is never good for competition, right? So this would be my
Let me jump quickly on this, because in my mind, I'm glad you said this, because everyone loses when there's fragmentation. Let's just be clear.
Yeah.
And even if you're in the UK or the US or whatever, the EU is a massive market. And if there's fragmentation here, everyone is losing. And one thing we didn't talk about a lot is cybersecurity, right? We have an instrument now in the DORA where there can be information and data sharing, across borders in the EU. Great step ahead. There is the financial services ISAC, where data can move very fast to counter cybersecurity risks and attacks, which are now being done by state actors. So we really have to step up the game. And if we're fragmented, then we're really going to hinder the resilience of EU and the financial economy. So, we definitely need to tackle fragmentation as an urgency. I think there was a lady in the back over there from the ECB who raised this, and I was kind of nodding my head. Yes, we have to tackle this.
So are there any further questions? I see one here in the block.
Mark Schaltuper, I'm with Revolut Bank Europe. I wanted to pick up on something partly to what Francesca's answer was just now, but also what was mentioned in the opening remarks. The examples that Ray cited about Caixa investing 5 billion, Santander offering wealth management in Germany, it sort of struck me that we're talking about 2 Spanish or Spain-based banks in Europe. What about the other banks?
I did mention ING.
Fair enough. You did. But there were obviously banks that were not mentioned in this response. And I suppose the second part of that question is, in particular, it's sort of, I guess, the difference between innovating to disrupt and innovating to defend. And is there an advantage or a potential disadvantage for banks? Thank you.
I mean,
Were you asking that to a specific person? Or?
the first part's for you, no?
Yeah. Look, I think innovation to disrupt is the most important thing, right? If understanding your question. And banks that were very traditional, that fought back against PSD, are now the greatest benefactors, of this, where they're working with fintechs, investing in them, and creating all these great services. We've seen in our trade association, we have transport, we have healthcare, we have you name it. And it's been a wave moving through each sector. I think the finance community worked very fast. Revolut is a clear example of a disruptor, I would think. I don't know if you call yourself disruptor.
Yeah, okay, I'm happy to build on that. And so I think there's a massive difference in a way to disrupt or to defend. And I think that's probably what we've been witnessing in the last 10 years, that there are a lot of new players coming to market, like us, to disrupt. So genuinely coming in with a view to play to win, to disrupt, to build the future of financial services. And the industry, as originally, because I was part of the industry, so I'm old enough, I can talk about this, the industry originally was skeptical. I remember we were at Barclays where we were still thinking it would be impossible forever to onboard a customer without seeing him in person, really. And this was not 50 years ago, because I'm not that old, but we really thought it would be impossible, so all these new startup, new players would go nowhere, effectively. And today, this is the norm, right? So I feel that banks, until the last 10 years, have probably been reacting once competition has created a real challenge. Only after that's created a real challenge. And then when you play to when you innovate to defend is always marginal. It's very difficult that it becomes a real disruption. I do think right now we are, however, at a pivotal moment, and different banks will take different direction, where there is the possibility to leapfrog. Some of the capabilities and skill set is also there in some of the big banks, not all of them. And so AI can give that possibility. So we might face a tougher competition now on both sides, but we need to see what's the level of adoption, right? But I think until now, the industry has been operating on new challenges, trying to shape the future, and so disrupt, and the industry mostly reacted. This is my 2 cents, very biased probably.
Just 20 seconds response. the line between innovating to disrupt and innovating to defend is actually very narrow now. It's a very fine line. We actually asked what we call traditional banks, they're not that traditional anymore. We have asked them to innovate themselves, to disrupt themselves by disrupting their existing transaction-based models into a database model. So we've been asking them to do exactly the same. We introduced 8 digital-only banks 5 years ago to start that process, and now we are bringing it to the next stage.
Yeah.
So there's another question.
Thank you. Adam Farkas from AFME, and I will have a question following up this discussion, which would be on the basis of Revolut's example. Francesca explained that it was a company based on data, and now it's becoming a bank, and it was all. It is all based on the disruption was based on PSD or open banking. What is your view on the reciprocity argument of allowing banks, incumbent banks or traditional banks, having access to the data of the disruptors who are business models based on data and data aggregation and data harvesting, and allowing the banks not to defend but also to try to disrupt that space and be competitive?
Yeah.
And this is a question to the whole panel, but specifically you are in a
Okay, so I'll try to be quick. So first of all, I want to clarify. I don't see these two things being mutually exclusive at all. I'm saying that Revolut as a culture is very data-driven and will remain forever, hopefully, even as we now are a bank or become a bank in different jurisdictions. So I think these two things, and in fact, I think that has to be the foundation of any financial service company in the future, any banks or no banks. So I think the only thing is that Revolut was a bit more future-proofed the way it was built, because in the future, everybody will need to go in that direction. So to your question, can it go the other way around? I would say definitely yes, and I think it's happening, and I completely agree. And that's why I'm saying we are at a pivotal moment where we're probably shifting from incumbent and challenger, and we are all kind of now challenger. So, and the exchange of information, the exchange of best practices, and the exchange of people is happening both ways, which is massive, and I see that a lot. So people matters, right? This is all about capabilities and talent, a lot. And it's really difficult to find AI talent, software development, and so on. And right now, we used to see a lot of people going from banks to challengers and bring practices. Now we're also seeing people going from some of the big technology companies or big companies like us, sometimes back to the banks, because there's a massive war for talent as well. So I think these two things are going in both directions, and I think that's welcome, because this probably created more competitive tension, so better outcomes for customers ultimately.
So as we run out of time, short answers from the others?
Yeah, sorry. Yeah.
Should I start? Just very quickly, Adam. The data that is most valuable probably are not the traditional type of financial data that we were talking about. It's unstructured data out there. And so that really, there's no proprietariness to those data when it comes to challenger banks like Revolut or our digital banks, our digital-only banks in Hong Kong. So it's open for all, I think.
Yeah, I really don't have much to add. I mean, I think the dialogue has to just continue, because the market is constantly evolving, and you have the regulators engaged and everyone's learning. So we just have to figure out what is it that's necessary, what is those gaps that are required, and then investigate that over time, I would say.
So this panel has been 2 minutes too long, sorry for that. But I thank you very much for your participation, to the panelists, and thank you also for the audience in participating in all polls and stuff. So thank you very much.